This is Bert Doman with Bert Doman's Chart Guru. Welcome today to our October 3rd edition. This is an important time in the markets. We're featuring today the Dow Jones Industrials Index chart. This is a daily chart where each vertical line here is 1 day of trading. You can see here the low after the election in November, which was a surprise low because everybody became very bearish because of the outcome. And the stock market, of course, fooled everyone. The stock market has been in an important rise since that time. The first peak and the internal peak in the market was in mid-May. We think this was really the internal top of the market, and everything since that time has been a distribution pattern. Distribution is where the big smart money sells to the naive money managers, and there are plenty of those. So what we have then at a top like this, the big money starts sells a lot of their positions, and then at the bottom they boost the market again because they have more selling to do, and then you can only sell large quantities of stock when the market is rising, and that's what we saw here. And this was a lower volume rise, and this is how you can tell if it's distribution. If the decline is on higher volume than the subsequent rise, it's a distribution. Okay, so there's less buying being done here than there was selling being done here. And then we had another decline. This was on heavier volume. And then we had a rise in September, which fooled everyone, or a lot of people at least, for the first 2 weeks. And this was also on lower volume. It was capped here by this 1 day big rise when the Federal Reserve decided not to reduce their quantitative easing. And that was a super bull trap. And we said it at that time that this is totally artificial. And as we saw now, that was the actual day of the high. This is a very bearish signal by itself, all by itself, if you don't look at anything else. And since that time, of course, the market has been declining. And the bulls keep on talking about all the beautiful stuff that you should be buying. Well, we would not do that, okay? But of course, it's always up to you. Here we drew a small trend line, and as we're getting closer to this trend line, there should be a bounce in the market. We'll probably go up here 1/3 of the retracement of the decline, or maybe up to 50% retracement, and then the market will start going down again. Once it breaks this trend line here, then of course you got to really start watching out below. And you know, there are lots of ways to make money in a declining market. We love declining markets. You can make so much more money and so much faster by selling short or buying the inverse ETFs. So let's look at our stochastic indicator here. This is a special stochastic, and when it crosses over here, we get a sell signal. When it crosses over again, we get a buy signal. When it crosses over here at the top, we get a sell signal. You know, and you can see here how beautiful these signals were. We get a buy signal here, that was right here in the market, and then we get a sell signal here, and that was right up here. Okay, so these signals by themselves, if you just use them mechanically, they work pretty well. Nothing is perfect, of course, but right now we have all indications technically that we have made a top. A 1, 2, 3 peak is very important for us. Over the years, this has always turned out to be a super sell signal at an important market top. And a 1, 2, 3 peak is when each peak is higher than the last one in the index, but it's accommodated by the indicators making slightly lower highs on each time. And here we can see that we drew a trend line here connecting these two peaks. And you can see that each time the indicator is weaker. So this is a typical distribution pattern. And here, this upside breakout was actually a false breakout. And as long-time subscribers of ours know, false upside breakouts usually lead to meaningful declines to the downside. So that's all for today. We're going to be updating much more frequently here in the near future because there's so many things that will be happening. So stay tuned. If you want to know how to profit from these moves in the markets using our subscription services, just go to domancapital.com and look at our trading services, especially, and the Wellington Letter, which we've been doing for over 35 years. It's one of the oldest publications around. and that alone speaks for the quality. Thank you very much for joining us today. This is Bert Dohmen signing off.